Hey everybody, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital asset markets. I'm Jeff Dorman, CIO of ARCA, and today joined by Byron Gilliam, who is the market strategist and newsletter writer at Blockworks. So Byron, thanks for joining me.
Thanks very much for having me, or thank you for letting me invite myself onto the show. That was a generous offer on Twitter.
Yeah, well, that's how it works. We've been doing this now for several months. We've been writing our blogs over on our website, ar.ca/blog, for almost 7 years now. And we're looking to get as many people in the crypto markets as possible to come on and talk to us about what they're seeing in the markets, what they like, what they don't like, get different perspectives, both from journalists, from strategists, from investors, from developers, from anybody, all walks of life. So before we get started here, quick disclaimer, as always, this is not investment advice. But again, we come on here every week. We talk about the market. So before we get started, Byron, and let yourself introduce yourself. A little bit of a weirder week, I guess, in the sense that we had a little bit of buy interest, but Bitcoin was up 8% or so last week. ETH and Sol lagged only up about 2%. Maybe we had a little bit of some of an alt rally here and there. Names that maybe higher quality names and some interesting names, things like Aerodrome and Drift and BitTensor leading the way. But really, it's still pretty boring and quiet in crypto land. Everything is just super highly correlated with Bitcoin right now, which is weird because it hasn't been really for the last 15 months. But over the last 3 months, really the entire crypto market has just taken a back seat to both the upcoming FOMC cut tomorrow as well as the presidential elections. And as such, we are just tracking whatever the NASDAQ and the S&P is doing, which again is tracking pretty much everything from the election to Fed cuts. So are you seeing anything different in the market that maybe is more interesting than I've let on?
No, I guess one thing that I've been thinking about and would be curious if you have an opinion on is that it seems to me like there's a funny contrast between the incredible energy in Singapore this week. I'm not in Singapore, but from what I gather on X and various places, and people emailing me and stuff, there just seems to be like there's a contrast between that energy and the very lackluster price action. Do you have any thoughts on that?
We've got boots in the ground over in Singapore. Our own Katie Talati's out there. Personally, I'm not really sure why we still have as many conferences as we do in crypto land. I mean, I spent 15 years on the buy side and sell side and debt and equity land before moving over to crypto. I maybe went to one conference a year, maybe. I mean, there just weren't that many interesting ones. That seems to be the norm here. So I think it's a little odd that there still are so many. At the same time, I mean, this is a global industry, and certainly meeting people is a big part of your success, both as a builder as well as an investor in this space. So I understand the get-togethers. But I guess it's, to answer your question, it's good that there's a lot of energy over there in Singapore. People aren't, not everybody is an investor. So not and also a lot of people are investors who have been doing this for 5 to 10 years and therefore still feel pretty good versus the people who came in 2 years ago who are all, tourists that have already left and pretty burned out and have horrible returns. So, probably a good sign that the energy level is still high, even if the investment returns aren't. But on the flip side, we usually, we have boots on the ground there because usually there's some really interesting developments and some really interesting news that comes out of these events. And thus far, really very little from that standpoint. So, maybe these conferences are starting to realize that it's more about a get together than it is about a showcase.
Well, I enjoy the conferences. As a work from home person, I appreciate an opportunity to get out and see people in real life.
Yeah, you got Solana Breakpoint starting this weekend as well. Haven't heard very much about that, even though historically that's been both really good for Solana and the ecosystem, but also, usually pretty popular event. So we've heard rumors that the attendance at Solana Breakpoint this year is going to be higher than ever before. So again, starting to see you're certainly seeing some vibes of a potential better market, even if you aren't seeing it in prices yet.
Yeah. And then my other market-related question to you would be that it seems like Solana is held up very well price-wise, but at the same time, the meme coin activity has really tailed off. So there doesn't seem to be a real correlation between the price of Solana, which is still quite good, and the transaction volumes, which are a lot lower than they were. Do you feel like those two should be correlated, or does that make sense to you that they're not?
Well, you sort of got two opposing forces, in my opinion, right? One is that there are still a lot of people who are, no matter what the evidence says otherwise, are just convinced that we're in a bull cycle, right? They're convinced that these 4-year cycles are the norm, even though everything in crypto has like n equals 2, n equals 3 at most, right? Not a lot of data points to go off of, but because everyone believes in this 4-year cycle, because everyone believes in these bull cycles, they're convinced that we're in one, even though again the price action suggests otherwise. For those who believe that, they are saying, okay, well, Bitcoin in the first bull cycle, you wanted to be long Bitcoin. In the second bull cycle, you wanted to be long Ethereum. And therefore, in the third one, you're going to want to be long Solana, right? That's just the horse that you want to back. So there's a lot of people that are not even looking at anything fundamental or metrics-wise, and are just saying that Solana is the newest, fastest horse, and that's what I want to own. For those who do look at the fundamentals, again, it's always a matter of time frame, right? Solana is absolutely gaining market share across a lot of different sectors of the crypto economy versus Ethereum, but also versus Binance Smart Chain and other layer 1 protocols. But there's no question in the last 2 months that has slowed down, right? Because a lot of the growth has been meme coins, and a lot of the future growth is DePIN, which hasn't really developed yet. So yeah, I mean, it's surprising, I guess, that Solana hasn't maybe followed the fundamentals more closely. But at the same time, I mean, again, it's not like Solana's killing it this year. It's up, 20% year to date. Bitcoin's up 40 and ETH is flat. So, that's probably where it should be, right? Bitcoin certainly has the ETF flows and the macro flows behind it with gold at all-time highs. Ethereum is, for whatever reason, the worst thing in the world right now in terms of investor sentiment in crypto. And Solana's somewhere in the middle, growing a little faster than Ethereum, but still not, nearly as big overall when it comes to developer activity and applications built on it.
Yeah, that almost makes it sound like crypto markets are rational, which I can't really believe. But
well, it depends. Usually they're rational if you are adjustable with your time frames, right? And I think that is where most investors get in trouble is either looking too short or too long, and not actually trying to sit down and rationalize and make sense of what may or may not actually be happening. But it actually brings me to a good point, Byron. I want to hear your thoughts on this as well, which is I spend a lot of times now, as 7 years now as chief investment officer of Arca. I spend a lot of time talking to investors, oftentimes very sophisticated traditional investors who don't know anything about crypto. And it's my job to kind of bridge that gap and help people understand. A lot of times the crypto community gets very mad at me because I dumb things down that they think are super interesting and complicated and techie. And I'm sitting here with one sentence analogies that they get annoyed about. But it really, we have found certain things that resonate and certain things that don't in the market. For example, I tweeted something over the weekend just saying, somebody was trying to defend Ethereum with some, 900-word soliloquy about why it's so great. And I said, you're overthinking it. Ethereum is an app store. It generates revenues when you have new apps being built and apps being downloaded and used. And ETH acts as both the equity of that app store as well as the payment vehicle of that app store. And basically, a protocol or anything really can only have 3 forms of value. It's either financial value, which is revenues and cash flows, or it has utility value, which is, some sort of loyalty points, or, in crypto's case, gas fees or collateral, some sort of utility that you can use it for, or it has social value, right? Some sort of, meme value or its coolness factor. And basically Ethereum used to have all 3. It has financial value, it has utility value, and it's used to have social value until recently when everyone hates it. And the amount of responses I got were for everything from Ethereum is dead, it's going to zero, it's overvalued, to you're missing the point. This is some amazing encrypted technology, and that's what the value is, to network effects, and just the amount of passionate responses I got. It makes me wonder where you come off on this. Having some TradFi experience as well. I'm always looking for the simple solution that's sellable to others, whereas others seem to always want to overly complicate what these assets are.
Yeah, I think you've definitely put your finger on it, because for me, big picture, the reason why Bitcoin has done so well is because it's got the best elevator pitch of all time, which is digital gold, right? And Solana also has a great elevator pitch, global NASDAQ, and ETH has been, or Ethereum has been, rotating through these various elevator pitches, and none of them have really stuck. And I love your idea of the app store. Like, I think that is something that could really resonate with TradFi investors now that they have access through ETFs.
And it does, by the way. I mean, again, I'm not making this stuff up. I've had, thousands, if not tens of thousands of conversations with investors. I try everything multiple times to see what works. I have 75-year-old parents. I try stuff on them to see if it makes sense before I talk to people. And without a doubt, explaining layer one protocols as app stores has the highest acceptance rate in terms of that aha moment where people understand it.
Right. But here's my question about that. So if, Apple has a take rate of like 30%, I think, on their app store. So what would the take rate be for Ethereum?
In terms of percentage of revenue that goes to Ethereum versus going to the apps themselves?
Yeah, it's like, that's probably unanswerable. I don't even know how you would quantify that, but I guess it's a leading question.
Well, it'd be very low though, right? Because in theory, the app itself, let's just say it's a banking app, something like DeFi. The app itself, in theory, should be generating almost all of the revenue, and it's only a very small amount of fees that they're paying to Ethereum via gas and via usage on the Ethereum network, right? So it should be fairly low, certainly relative to what you could think of today in terms of the iOS Apple App Store.
Yeah, I mean, I think it's.
But at the same time, that's just in terms of transaction fees. But you also have the fact that ETH is essentially the form of money used in that app store, which would increase at least even though it wouldn't necessarily increase the take rate, it would increase the value proposition of ETH within that app store.
Yeah. Yeah, so my assumption is that it's super low. So if Apple's 30%, Ethereum has got to be less than 1% or something. But I'm totally guessing. I don't actually.
I mean, that sounds right.
Which, on the one hand, is great because that's what crypto is supposed to be doing, right? It's supposed to be disintermediating these middlemen on the one hand. But if you're an investor, then you want to be the middleman, right? So there's kind of a push and a pull there. But from my perspective, like, because the take rate is so incredibly low, like, maybe it's not the best app store from an investor point of view. But then I also think that if you look at it through the lens of Ben Thompson at Strategist, who talks about platforms and aggregators, the Apple App Store is an incredible platform. Because it controls 1.4 billion users, all those iPhone owners, and it facilitates transactions between applications and businesses and those users. And Ethereum did do that and still does that, but increasingly less so, right? Because the users are moving to L2s, right? So now it's the L2s are the ones that are controlling demand. And if you want to make an investment case, and this is only an investment case, not a technology case, right? If you want to make an investment case for something, you really want to control the demand. And it seems like now the demand is controlled by the L2s.
Yeah, but another way to think about that would be that the L2s are just the apps themselves, right? That essentially the L2s are the apps of Ethereum, and then you have separate apps of the L2s.
Yeah, I mean, L2s aren't literally apps, though, right? I mean, they're not like smart contracts on mainnet, right? They just.
But you also brought up another point, another analogy I use with people all the time, because so many of our investors are so hung up over which protocol is going to win, which protocol do I invest in, and my answer is always it doesn't matter, because ultimately, if blockchain works, every single blockchain that has users is ultimately going to have apps on it. And the analogy I always use there is that you just talked about 1.4 billion of users in iOS. Android has probably 3 times that, right? The 2 to 3 billion users. But the reality is there's almost no app that has been developed that's popular that doesn't have both an Android and an iOS version, because there'd be no company in history who says, nope, I'm just going to hitch my wagon to these users and ignore these billions of other users over there. That'd be crazy. Once you build something that you might start on iOS or you might start on Android, but eventually you have both. And the rationale is simple, which is if you have a popular application, you want to go where all the users are. And the same thing is going to be true in crypto. The only problem is we haven't had any successful apps. The only successful app really to date has been stablecoins, and stablecoins are cross-chain. You could argue Uniswap has had pretty, relative success to other things, and Uniswap is cross-chain. So if we ever actually have any successful apps, and I'm not talking about a couple thousand users or even 10,000 users, maybe Axie Infinity broke the mold with 2 million users for a couple of months, but we haven't had anything close to tens, if not hundreds of millions of users, which is what we see in some of these other popular apps in your various app stores. If we get anything close to the tens of millions of users, they're going to be cross-chain. It ultimately does not matter which protocol you have. They're going to use all of them, right? And another analogy I give to people when talking about that is looking at emails, for example, right? Obviously, SMTP is the protocol for email. And you as a user, it doesn't really matter if you use Gmail or you use Yahoo or you use Hotmail or whatever. Ultimately, it's not like you can't transact with others who are using a different interface. Once we get real interoperability, and once we get popular applications, the same thing is going to be true. The end user is going to use whatever the hell they want, and which protocol is powering it is ultimately going to be irrelevant. And I think part of the reason people are so focused on protocols right now is, one, there's just literally nothing else to look at. Two is I still don't believe the fat protocol thesis is true, but for some reason, because there hasn't been anything better, that shout out to Chris Bernitzky and his team over at placeholder. But I just think that's nonsense, the fat protocol thesis, but it has persisted because there hasn't been any other collective apps to take its place. And also just the venture capital culture that they will literally invest in any layer one because they know that as soon as the token goes live, it's going to have $1 billion valuation. So you just have just constant infrastructure being built over and over and over again unnecessarily because that's what has been trained to work. But these applications are ultimately going to be what drives consumers. And once you have the consumers coming in, again, the underlying blockchain is going to be fairly irrelevant. It's going to be interoperable between them, and everything's going to be multi-chain.
So do you think there's an investment case to be made for Ethereum if it is only ever a supplier of, say, data availability and settlement to applications that are running on layer 2 blockchains? Or does Ethereum need to get to a place where the applications are running directly on Ethereum?
I'm not sure it really matters. And again, this goes back to the fact that so many people in this space are tech first and finance second. And they think if you have network effects, you have value. But that's not true, right? Network effects leads to a form of value, right? Again, value comes in three forms. It's either financial value, it's utility value, or it's social value. There's no other types of value. Everything has to have one, if not more, of those three. So ultimately, what Ethereum becomes, whether it's direct usage on Ethereum or it's just, again, the security layer, the data availability layer, ultimately, as long as ETH is used in some capacity, either as gas or collateral, then it will always have the utility value. And ultimately, if there's some fees being generated back to Ethereum, which again, all these layer twos have to basically pay fees to Ethereum, there will be financial value. Maybe the social value goes away over time and nobody talks about Ethereum 20 years from now, but you're going to have financial and utility value. Now, does that mean it's worth $400 billion? Maybe, maybe not, right? Maybe it's worth 10 trillion, maybe it's worth 20 billion, but you will always have those financial and utility value on something like Ethereum. And quite frankly, it's the same for Solana and every other, anything that has the word layer in front of it, I'm completely disinterested in right now as an investor because there's just so many of them. But they do have both the financial and the utility value. And I don't think that's going away, regardless of which ones ultimately win. Again, wherever the users are, applications are going to be built on those blockchains.
Oh. So do you think about Ethereum or the Ether token in any like traditional multiple metrics kind of ways?
We try. I mean, we've had multiple valuation techniques at Arca thinking these things through. We've tried to value Ethereum almost like a government, or rather like a think of Ethereum as an island, right? When the protocol first came out, it's a blank island somebody discovered, and then eventually one day there's roads and schools and businesses and things built, and ultimately the tax revenue is what goes back to the entity. We've thought about it that way, but it's hard to really value because it's circular, right? All of your revenues are in ETH, but also the value is in ETH. So it's sort of a circular argument and hard to come up with a dollar-based value of Ethereum that way. We've also looked at Ethereum from a free cash flow standpoint, just as a company. And again, that's harder to do just in the sense that you have essentially both the utility and the financial factor. So you can value one or you can value the other, but it's hard to kind of put them together and figure out that synergistic value. But also at the same time, every single fee-based business in the world is trending towards zero fees. So, it's why equity investors hate Coinbase, right? 95% of Coinbase's revenues are still coming from 3% fees on the retail app. And, fees are going to zero. It's why investors hate Robinhood. Nobody wants to invest in anything that's a fee-based business because fees are all trending to zero. Look at the ETF industry and how fast they're cannibalizing themselves, and look at what a multiple is for any asset manager, right? Look at the public asset managers; they traded a fraction of their AUM. Wisdom Tree has $1 billion market cap. They have $100 billion in assets. So, I think that's the issue you have with all of these layer one blockchains is when you have a fee-based business, it's going to be heavily discounted. And that's not an Ethereum thing. That's a layer one blockchain thing. The same is going to be true of Solana and of Sui and of the layer twos and any of them, right? There's too many of them. They're commodities. And it's really hard to look at any of these from a financial standpoint unless you believe that the amount of transactions that are going to exist in the future are 1,000x multiple of what we have today.
Except for Bitcoin.
May be true.
I do really like your thesis of Bitcoin as CDS. I think about it that way also.
Yeah, and don't forget, so this is another thing that I wrote in the blog for those who want to read the full thing. I put 5 analogies in there that I use every day. But for Bitcoin, it's the same thing. It's not necessarily that I believe that, but I think it's the easiest way to explain Bitcoin, which is you can't put a dollar price on Bitcoin from a value standpoint because there is no utility and there is no cash flow. The only thing that's there is social value. The only way to value Bitcoin is either from a relative value framework versus gold. And you say, hey, I think Bitcoin and gold are the same thing. And if gold is 17 trillion and Bitcoin's $1 trillion, therefore Bitcoin's undervalued. But if you actually want to come up with a real financial framework for Bitcoin, you have to think of it as an all or none proposition, right? It's either worth 0 and the experiment has failed, or it's worth tens of trillions of dollars because it actually is a true currency. And every dollar price in between that is just a probability. It's the market expressing a probability of confidence of whether or not we're going to hit one of those two numbers. So the further we move away from 0, the higher that confidence level is. And really the way that to price it would be looking at it as a credit default swap or a CDS contract on government and bank failure. Because the more government and bank mistrust and distrust that we have and the more failures that happen, ultimately Bitcoin is an insurance policy against the end of money as we know it, which is run by governments and banks. And when you do it that way and you look at the hundreds of billions of dollars of liabilities out there, actually it's really in the trillions when you look at it collectively across all governments, it's pretty easy to make a case for why Bitcoin is worth a couple $1 trillion to protect against hundreds of billions, if not trillions of dollars elsewhere. So that's one way that you can explain it, at least to TradFi people, and they will understand it more so than just calling it digital gold.
And also, then when the price goes down, we can just be happy that insurance is getting cheaper, right?
Yeah, and it's funny, exactly. You want insurance to be cheaper, and you should be buying it anytime the price goes down. But we've seen this in action, right? People, every time a market, look at August 5th, right? August 5th, the Nikkei fell 12%. NASDAQ futures were down 7 on the open. Everyone's freaking out, and of course, the narrative is Bitcoin didn't work as a defensive asset because it didn't go up when the markets were melting down. And it's like, well, that's not the point, right? It's not meant to defend against a market gyration. But if you look at how Bitcoin responds every time there's a Cyprus bank failure or the March 2020 regional U.S. banking crisis or any sort of government debasement, Bitcoin almost always goes higher, right? It really is there's different forms of the word flight to quality, right? Flight to quality doesn't necessarily mean market gyration, but a flight to quality against governments and banks is really what Bitcoin has always been. And whenever you see something failing in the banking or government trust system, that's when the probability of Bitcoin's future goes up, and that's when you see big gaps in the Bitcoin price.
Yeah, I think that's similar to how we've learned that it's not a hedge against inflation, but it probably still is a hedge against hyperinflation.
Exactly.
Which is really more useful.
Great. Well, Byron, I think we're pushing up on time. I appreciate you joining. Anything else you want to leave the audience with in terms of how they can reach you, what they can read of yours, or any other market thoughts?
Not at all. I just came on because I always watch your guys' updates and enjoy them. So I would encourage everybody else to keep watching your stuff.
All right. Well, I appreciate it. Byron from Blockworks. Check out his newsletters as well. And I'd love to have you back any other time you read or see something of ours that you want to debate. But for everyone else, I appreciate you guys listening. As always, you can go to our website, ar.ca/blog, and read That's Our Two Satoshis and read all of the analogies that we put together. And we'll be back again next week. Thanks, everybody. And thank you, Byron.
Thanks, Jeff.